So, Netflix just saw its share price fall by 30% in one day. It's now down more than 60% from its all-time highs back in 2021. It is seen as an absolute failure, and there are a lot of people talking about it, discussing why it's failing and what exactly is going on. Now, back in January, I made a previous video again about Netflix where I explained another flash crash that Netflix saw where it dropped 20% in value over one day. And today, we're going to quickly go back, recap what I said back in January, and then look at what's actually new today to discuss why Netflix is such a mess. So back in January, they had their earnings report, and in short, it was really poor. Their growth, the actual number of subscribers that Netflix had paying them a monthly income, well, that slowed a worrying amount, and this was obviously upsetting to investors. Their operating income as well fell from $1.4 billion down to $0.6 billion, which is a major hit too. To make matters even worse, Netflix actually invested more into the business only to see its growth actually slow during that quarter. They invested $1 billion more in that quarter than the prior one, and yet they only made an extra $0.2 billion more in income. Now, Netflix at the time blamed what they called a COVID overhang, which was just an outright lie and actually didn't make any sense at all. The idea was that Netflix saw such huge growth during the pandemic that this was sort of less growth in response to that, similar to the sort of inflation argument that because we've had really high inflation now, we will soon get deflation to make up for that, but there isn't really any evidence to actually suggest that's the case. Netflix was kind of banking on a few big blockbuster films that they created, produced, filmed, did everything for themselves that was supposed to help boost subscriber numbers. Back in early 2022, the big films were Red Notice and Don't Look Up, neither of which actually really helped the company, despite costing hundreds of millions of dollars to produce. Now, in short, Netflix was still growing, but that growth rate was slowing very severely. But not everyone thought it was all bad. Bill Ackman, for example, bought 3.1 million shares after it crashed back in January, confident that the market had got it wrong and that Netflix will continue to grow at a major pace and surprise all of us. Yesterday then, what happened? Well, we got new reports from Netflix, and in short, Bill Ackman was wrong, and I and everyone else here on YouTube really was right. Netflix actually lost 200,000 subscribers. They didn't see any growth at all. The total number of people paying their Netflix subscriptions actually decreased, and this was the first shrinkage they saw since 2011, 11 years ago. To make matters even worse, Netflix is also expecting to lose another 2 million paying subscribers over the next quarter, which is absolutely abysmal. Now, Wall Street analysts thought the complete opposite was going to happen. They had priced in growth of 2 million subscribers, not losses of that much. So that was a huge miss and an absolute failure. So of course, the share price tanked, but by 30%, which some people think is a little bit excessive. Personally, I don't. Netflix have also come out calling people out for sharing their accounts, something which they actually allow. But they are now claiming that 100 million of their users should be paying for subscriptions, but they aren't, and they are planning to target them. The major problem with this is that Netflix has tried to increase their income by raising prices in the past under the idea or the assumption that most people would just cough up the extra cash. The problem is, though, people didn't cough up that extra cash, they quit their subscriptions instead, and these people account sharing do so because they're not willing to pay the subscription for the service, so they will probably just cancel their subscription too. To make matters even worse, as a cherry on the top of the awful cake for Netflix, they also expect to miss analysts' expectations for income and profit as well, just another kick in the teeth. Now, I do think it's worth mentioning that this is actually a wider industry problem. It's not just Netflix at fault, although they are also personally responsible. Take a look at a company like Roku, for example, which has also seen its share price getting absolutely hammered, and its growth has not been at what they were hoping for either. Now, the COVID boost is well and truly over. Work from home, that whole idea, that whole culture that we had from the lockdowns, it's over, and companies like Netflix are not going to benefit from it anymore. To make matters worse, Western markets for Netflix have been almost fully penetrated. Basically, the idea is that everyone in America who wants a Netflix account already has one. There aren't many people who know what Netflix is, know that it provides media and TV and films, and they want it, but they haven't got it because it's been around for so long and it is so ingrained in culture. Now, one part of Netflix which has actually been getting quite a lot of attention and may have some impact on why people are leaving Netflix in droves is the idea that Netflix is woke, and that annoys quite a lot of people. Don't Look Up, that film with Leonardo DiCaprio, basically spent 2 hours insulting half of the population, and it pandered to the other half, and frankly, that's a bad business idea. I'm going to try and keep my opinions on Trump and whichever Democrat nominee we're talking about, Biden or Clinton, aside here, but it was pretty clear that the Trumpists of that video were the bad people and that the Democrats were the good people, and that's fine if you want to make a film like that, but you need to recognize that half of the people watching that film are not going to enjoy it. The problem with it is that the other half who do enjoy it, they're probably not going to buy Netflix just based on that film alone, so you're probably going to be destroying your customer base by putting something like that out. Netflix is also insistent on moving further into this direction, pandering to what I call the vocal minority. This new Netflix show is being advertised, for example, and it's getting a lot of flack for not really being representative of what most people want to watch on Netflix. The simple fact is, and again, I'm trying not to get political here because this isn't my politics channel, it's just that most people find that kind of stuff annoying. They don't find it endearing and they don't want to watch that show, and quite a lot of them actually don't want to support a company which produces that show. And frankly, they don't have to watch Netflix anymore because there are so many competitors which are already so developed. This market is no longer niche, it is mainstream. Even Elon Musk, I know we can't get away from speaking about Elon Musk, I'm sorry, but even he has been giving Netflix some crap for being too woke, calling them out on their tweets recently. Now, why did it dip so much? For a $500 billion, or what used to be a $500 billion company, a 30% dip in one day is absolutely monumental and cannot be overstated. Well, frankly, it was overpriced. It's pretty much just as simple as that. Netflix had perfection priced into their share price, and anything less than that warrants a drop in perceived value. And what we've just seen for 2 quarters in a row and what we expect to see for another quarter is far, far less than perfection. At its peak, Netflix was priced with a higher PE than Microsoft, Apple, and Amazon, despite having far slower growth and far fewer chances for growth into the future. There is no huge moat for Netflix. Their algorithm is crap. They are losing the content war as well. Frankly, Netflix never should have been considered a FANG company, and the fact it is shows how deluded the analysts and the market was. Now, in fairness, I think that this delusion was actually fueled by Silicon Valley tech bros and the crazy salaries that they commanded in that sort of industry, and the fact that Netflix was paying out those crazy salaries, so it kind of just naturally became one of these big companies, despite the fact it wasn't a tech company, and it still isn't today. Netflix really is a media company. They create content. The only problem is that that content is getting very bad. Now, another problem is that Netflix raised prices, and analysts thought that subscriptions would be inelastic. Basically, that people would see that an extra $2 goes out of their account every month, but they wouldn't cancel it because of that reason. Those people were wrong. People did cancel their subscriptions, and this again limits the scope for price increases in the future and means that Netflix is pretty much doomed to maintain their current prices and not expand them and not expand their revenues. Again, that's obviously bad news. There is loads of competition in this sector now. Netflix had years as the big dog, as the #1 streaming service, and to be fair, they probably still are the #1 streaming service, at least I would consider them that, but they are under attack by companies with really deep pockets. Roku, Disney, Apple, and Amazon, for example, are all huge players, and they're all backed by major companies, or they have loads of cash on hand to create really compelling, interesting content, videos, TV shows, films, and publish them online, and they're doing very well with it. Essentially, Netflix is no longer essential. That's the major problem here. But this is all well known, to be honest. My opinion is that Netflix's room for growth in the richest countries is just too small these days. Breaking into new markets is just as difficult for Netflix as it is for their competitors, so they actually don't have a comparative advantage there anymore. They also have pretty pathetic foreign language options, making it even harder for these foreign markets. To top it all off, macroeconomic factors are very bad as well. I know I've spoken about this so much on this channel by this time, but it's just the reality here. Netflix is cash flow free, so they don't actually need to raise capital to survive, but if they want to grow huge amounts, and they clearly want to be priced as a growth company, then they have to compete with the likes of Apple and Disney, and they have to leverage their wealth. They have to take out loans or release company bonds or find fundraising. They need to spend money, which is about to get far, far more expensive. Interest rates are rising, bond yields are rising, raising capital will get more expensive in every single market, and Netflix will not at all be immune to that effect. Rising interest rates will also mean that people will have less money to spend on average, and they will have higher debt obligations. And that means that there's even less money to spend on leisure. And we've already seen people cancel Netflix due to price rises. So maybe if they have less disposable income, Netflix might be the first thing to cancel. Ultimately, Netflix had a 10-year head start. They used it very well. They built up to be the most dominant player in streaming, and they basically created and formed this market as a whole. The problem is that now there is too much competition, and there's nothing really to actually set Netflix apart. Their rivals have deeper pockets than they do. Their growth is starting to wane, and it's only going to get worse. The company is still priced pretty expensively, or at least it was prior to this 30% crash. Why own Netflix, for example, when Apple or Amazon are available and they're just better businesses and investments in every sense of the word? Investors are realizing this, prices are reacting. This is a very natural phenomenon. It's not a new trend either. Netflix has been crashing really consistently for about a year now. This is just a quick acceleration in that trend. Now, if you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that can help you protect your portfolio against inflation through fractional shares of art from world famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink as they are. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. Thanks for watching, stay stoic, until next time.